What's going up there? It's March 29th. I'm Frank Curzio. It's the Wall Street Journal podcast where I break the headlines and... tell you what's really moving these markets. So I'm back in the saddle again. I want to thank Mr. Daniel Creech filling in last week. Hopefully you all gave him some crap. Sent them crazy emails. That's your job. Always have fun with the new guys. Although Daniel is not that new anymore. Get used to the podcast. My partner, Wall Street Unplugged Premium now. But he filled in because I finally moved into my house. I know I've been talking about this forever. Probably boring the hell out of you. I have to tell you, for one second, I almost forgot I lived in Florida. Because on Monday, I had a vendor coming over to install my TVs. These guys are already in my house. They installed my alarm, wired my house with speakers, put a projector screen. They had to come back to install my TVs, mounted to the walls. And these TVs were still at my old house. So they couldn't do it on that day. They were at my old house because I couldn't take my TVs off my walls and bring them to the new house because my new house wasn't ready. My home builders, as you know, as everyone knows, who built their own house, are still taking forever. Still have now we're living there. They still have people coming in and out of our house, which is amazing. So I had to tell them, hey, we'll have the TVs there another day. Anyway, if you guys listen to this podcast, you probably know this, but I'm a big TV guy. Getting the theater room, surround sound. This is my man room, which I never had before. Gonna teach me how to use everything, hook up everything. Which I know most of this stuff, but this is really sophisticated. I even rented a van so I could pick up my TVs from my house to transport them because TVs nowadays, I mean, you go to a Consumer Electronics Show like I've been going to every year, they're thinner and thinner and thinner. If you breathe on them, they crack and they're done. They don't even crack. You just tap them and a line comes through and the TV's done. So let me transport them myself. I rented a van. So I took off Monday, really excited. They were coming at 8 a.m. Going to probably be there the whole day. I was going to ask them questions. Last time they were there, I was having fun. I was asking them so many different questions. But seriously, really, really excited. And then what happened? 8 o'clock rolls around. Then 8:15. Then 8:20. My phone rings and they call. And I go, hey, Frank, how you doing? Sorry, but we can't make it today because our tech guy called in sick. Last time they came with like 3 or 4 tech guys. But they say one tech guy called in sick. And it wasn't like this COVID thing or whatever. He just called in sick. I could tell you that the conversation did not go well. I literally went off on this person. And I took the entire day off. Planned around this whole entire event. Have family coming in. Never have any TVs installed. And they canceled. They didn't cancel the day before. They didn't cancel 2 hours before they were supposed to come. They canceled after they were scheduled to come. The whole entire day. Because this is an hour away from my office. So I plan everything. I said, okay, I can do different things. You plan the whole day and the whole week around it, saying, okay, Monday I'll take off. We'll do this. But now they're like, oh, we can't make it. And we'll be there next Monday. And for me, I forgot I lived in Florida. I guess, this is kind of normal, right? They just don't show up. I'm surprised they even called, but I couldn't believe that I said no effing way. There is no effing way this happened. My kids going to school and my wife driving. Again, lots of plans, lots of moving parts. And for someone to call when they're supposed to be there and they just don't show up. I'm like, is this person fired? I mean, usually you have to call in ahead of time when you call in sick. Or they just call in sick. How come you just let them know now? Oh, well, sorry. I said, sorry, that's it? You're just sorry, that's it? So what do you do for me? Do you repay me the money I'm losing for not working today? No, of course not. Sorry, we'll be there Monday. That was it. But again, for that 1 second, I forgot that I live in the lazy piece of, I won't curse, loser working state. Everybody hates to work here. It's amazing. And now the population's growing like insanity. Crazy in Florida. I know you've seen the same thing in Texas. Crazy. I mean, you've seen it in statistics too. You've seen where the home prices are coming down. I'll talk about that in a minute. Where they're coming down from places that people are leaving, that they hate. San Francisco, Seattle, Portland. Look where Miami prices are. They're up 13, 14%. Atlanta's through the roof. If you look at almost any place in Florida, through the roof. And if you live any place outside of Florida and you want to make $100,000 a year, come here. You could do that cutting lawn because nobody shows up. Nobody ever shows up. Ever. This is like 100% guaranteed. I mean, this isn't like, oh, sometimes people show up. Or maybe, never. They may show up once or twice and that's it. And they're done. I mean, it is so consistent and it is the culture here. But how do you run businesses like this? I just don't know. In New York, I mean, they would be put out of business. There's always grinding. If someone drops the ball, someone's there to pick it up and run with it. Here, no way. They're like, oh, we'll come next Monday. Like the Final Four is not this weekend. Are you out of your mind? Oh, we'll come next weekend. Or on Monday. We're going to miss the weekend. You're going to have family coming in. And when I'm not at work, there's no TVs working, nothing. Now, for me, I'm normally not a spiteful person, normally. But this time, I'm actually going to enjoy being that way. Because what I needed to do is I had to get the TVs installed, and I called someone else I was working on a house and said, look, could you install these? And installing them, look, it's a matter of putting screws. You have to get the beams and stuff like that. You don't want to mess it up, especially if you have flat screen, nice TVs, right? And it's not like they're great and beautiful, but still, they're heavy. If they fall, they're done, right? So you really want to get it done professionally. Plus, they're insured. And I had a guy come over, and he installed them the same day. And he's going to finish the rest of it on Wednesday. So now the original guys are supposed to come over. I'm not telling them that. I'm going to have them come over. I'm going to be spiteful. I'm always a nice guy, and I want to be an asshole for once. I'm always a nice guy. And it feels good, right? It's refreshing when you're like that sometimes. And this is going to be really refreshing when they ring my doorbell with their whole crew, and they're like, okay, we're ready. And I'm like, oh, you know what? I'm good. My TVs are done. Sorry. I know it's spiteful. It's childish. But, man, that's going to feel so good. That's going to feel so good. And I don't care if you disagree with it, but oh man, I can't wait to see that face. It's going to feel so good. It really is. It's nice to be a child sometimes, right? But I mean, maybe that's what they need to see because they don't realize. And again, I don't want to curse here, but I mean, you're taking the whole day off, the whole entire day. Your schedule from like early through 5 p.m., 6 p.m., the whole house teaching me how to use everything. Really? Are you kidding me? And you cancel after the time you're supposed to be there? I'm waiting for you. Are you kidding me? But I can't wait for them to ring the bell. I just can't wait. Sorry. It's so bad to say that. I know. You guys are probably like, oh, you're crazy. Don't waste your time. No, this time I'm going to waste my time. I'm going to really, really enjoy this. Because this happened to me so many times. And again, I feel like I'm always a nice guy and always give people the benefit of the doubt. I don't want to be nice. It's nice not to be nice sometimes. Just a little bit. Anyway, speaking of nice, it's nice to be back in the hot seat where we're seeing the markets have absolutely no direction. Does anybody know what's going on? I've been doing this for 30 years. I have no clue. The Fed has no clue. The Fed has absolutely no clue what's going on. No clue. How the hell is the stock market not coming down? Earnings are still, haven't been revised. They've been revised lower, but they still have to come down a lot more. I mean, expectations are high. And where are you going to invest in? I mean, the banks are really, really bad. You got to get out of them. Holy cow, special community. Now, all of a sudden, they're good. The Fed's backstopping them. Tech was great over the past month. This is the place to save, have a good balance sheets. Last 2 days, it got wrecked. Oil was terrible, horrible. Now it's going back up. Not just the oil price. Oil price was at $73, $74. Fell to the 60s, but oil stocks have really ramped higher. Outperform spot. Yeah, Bitcoin is good and bad on the same day. I mean, what do you have? Lawsuits being filed everywhere against Binance. You had Paxos. You have Coinbase, the Wells letter. You guys aren't familiar with Wells letter? It's basically the SEC saying, "Hey, we're coming after you and we're going to fine you." That's the last step. Wells, I don't know why they have that. It's kind of like, they just, all right, here's a Wells letter, okay, and then like a couple weeks later, now we're going to fine you. I don't know, just it's the way it's been like for 100 years, and they keep doing it. But they come after Binance, Paxos, Coinbase, every crypto bank to no longer do business in the U.S. And you look at the government and you say, well, the government's trying to regulate the sector. No, they're not trying to regulate the sector. If they're trying to regulate the sector, they would have provided rules. There's no rules. If you're looking at Coinbase, you're looking at Paxos, you're looking at Binance, even CZ said this in one of his tweets. I mean, and I know from being in this industry and knowing the people behind the scenes here, they've been talking to the government for the last 2 years saying, what do we need to do? We're one of the big players in the industry. What do we need to do? Tell us what to do. And the government was kind of working with them. And then mid-January, the government said, F you, and you can't talk to us anymore. This is what really happened. Now they're going after everyone. So they're not trying to regulate this industry. They're trying to wipe crypto off the map. I mean, you don't go to a bank that's fully regulated, that does not have fraud. Oh, fraud has not been proven. Think about that. A bank where fraud has not been proven. If you look at Silvergate and you tell them that you can no longer accept deposits ever again, you forced as soon as the government said that, all of their big players, Coinbase, Paxos, they all have accounts there. That's why they did the banking. They all left like the same day. It was like in February. Same with Signature. You can't do business. Oh, you checked off all the boxes, but too bad. No, all the major banks. No, you don't do that when you regulate. You're trying to destroy crypto. Yet Bitcoin and Ethereum have held up well. Bitcoin's what, 27.5? Ethereum's 1,800, below 1,000. Bitcoin was 15,000, it's 27,500. Now the rest of the world is going to innovate much, much faster. Again, this is where the innovation is coming from. The U.S. is just too stupid, and there are no regulators to understand this, to actually go in and regulate the right way, which is an industry that has to be regulated. Of course it has to be regulated. You could be going after so many companies. Is Coinbase the one that you're going to go after? The one that's trying to work with the government? The one that's saying, hey, we're in good standing here. We're doing the right thing. We're a publicly traded company, just like Signature Bank, publicly traded company. The crypto, back and forth, back and forth, back and forth. Should I invest? Should I not? And we had super high rates. Remember those days? That was such a long time ago, 3 weeks ago. Then they crashed when the banking crisis hit. Everyone said, that's awesome. A banking crisis is absolutely awesome because every single time it causes deflation, and that's exactly what we need. So they spun that into a positive. And that theory lasted for 5 days. For about 5 days. Now rates starting to pop again. 2 years back, over 4%, 4.1%. Be exact. You look at the past 30 days, the Fed. 30 days, look at the Fed. Went from disinflation, high-fiving, we're cool, to holy shit, inflation's coming back, to now the Fed's like, we don't know what's going on. Okay, we can't really say that. We're going to say we're going to be data dependent because we have no clue what's going to happen. We didn't see the banking crisis. We fell asleep. We didn't see this bank crisis happen. We had no idea what was going on. Even though we raised rates so fast, we just didn't even see this. Even though if you look at how much deposits are insured, you could find that information out. An analyst could find that information out in about 15 seconds of every bank if you have Bloomberg or Capital IQ. It's available for everyone to see. It's available for the bank. It's not. This isn't the credit crisis. I mean, nobody had a clue what was going on. These guys are hiding shit everywhere. These banks, and synthetic loans, and they were covering themselves, and they all covered themselves through AIG. Nobody knew AIG had this much exposure. I mean, there was stuff going on nobody knew. This is stuff this is the Fed's job. This is a bank regulator's job to understand what was going on, and they missed it. They clearly missed it. So now, it's not like, oh, well, they're going to lower rates soon, or they're going to raise rates soon, or they're going to continue to raise rates. What's happening? We're data dependent because we have absolutely no clue what's going on. Absolutely no clue. And they have had no clue what's going on. Just flip-flopping back and forth. Transitory, it's not transitory, it's transitory, it's not transitory. We're going to raise rates right away, and then we're going to lower rates right after we raise them. Seriously. How about you don't do anything? Why raise it really, really fast by the most in history, and then a couple months later, we're going to start lowering them. That's what the Fed futures is pricing in right now. How about you do nothing? Let the markets be themselves. Let shit work itself out. People are too aggressive. Then they deserve to fail. But not if you're a connected bank. Absolutely not. You're not allowed to fail. Not if you're connected. I don't care if you don't have a chief compliance officer. You do have a chief diversity officer. That's more important, Silicon Valley. Much more important. But we have to bail these guys out. Of course you have to bail those guys out. Absolutely. Good job. Look at housing. Housing stocks have soared. Yet the Case-Shiller Index for January was just released, showing that home prices fell for the 7th straight month. Awesome. Means inflation's finally cooling. A big deal since housing, especially rents, are a big component of CPI. It's over 30%. But let's take a closer look at this. Because fact, home prices have declined for 7 straight months. Fact, the percentage of that total decline is 5.2% from their June highs. Yet the average home price is up 37% from January 2020. That's over 3 years. You mean to tell me that a 5% decline in home prices? You showing that inflation is cooling? I mentioned earlier, you have cities like San Francisco, Seattle, Oregon, Portland, see home prices fall sharply. You can only wonder why. People leaving these states in droves. You could determine why they're doing this, depending on if you're a liberal, if you're a conservative, or whatever, you have a different opinion of it. But it's fact. People are leaving these cities in droves. That's why home prices are coming down. But when you take the whole pie and you look at Miami, Miami's up, price up 14%, Tampa 11%, Atlanta up 8.5%. So should we celebrate this number like it's the end of inflation? Yes, it's the end of inflation. It's great, 7 straight months. Jeremy Siegel's going to go on TV, and I told you. We have deflation now. Like the guy, does that guy pay a bill? Does he buy anything? I mean, seriously, there's not one bill that guy is paying that's cheaper than it was a month ago, 3 months ago, a year ago. Based on my data, which showing where? By a 5% decline in home prices? This means that the Fed should be turning around and lowering rates? Really? Are you out of your mind? You really think there's no inflation in the market right now? Are you crazy? But should we celebrate this? Again, like it's the end of inflation and things are great. Again, like the Fed's going to suddenly start lowering rates? Really? You think the Fed's going to start lowering rates anytime soon? And then we get to earnings. I have no idea. And this is what I do. I love covering earnings. I have no idea how companies are going to meet their earning estimates going into this earnings season. I have no idea. I mean, they're going to be buying back stock. They're cutting costs as much as they can. And yeah, you might be able to meet them. But what about the top line, right? So you're going to see the top line go down and maybe the bottom line hang in there for a little bit. But you're seeing demand destruction. You're seeing companies cut back. They see it coming. You're not seeing it across all industries. You're not seeing it in jobs. You're not seeing it in services. But man, you're seeing it in technology. People think NVIDIA is like, oh, we have $7 trillion market in 10 years. AI, NVIDIA is a god. They're going to grow. Good luck. Good luck with that thesis. Because, man, the tech companies are reining in spending like crazy. And they're talking about NVIDIA like it's going to top their all-time high. Yet revenues are still up 20% year over year. Good luck. Because, man, expectations for the stock trading at 60 times forward earnings, man, they better get 30% of that pie. Because if they don't, especially going into the next couple quarters, showing we're seeing massive growth in AI and gaming bottomed, like they said, even though every gaming company, if you cover, didn't say that. They don't believe it's bottomed. NVIDIA does, though. Interesting. But what about earnings? They've been revised lower, but not nearly enough. Past month, they haven't been revised that much lower. They're still exceptionally high. Exceptionally high. So this crazy back and forth, even in sentiment indicators, which is showing extreme pessimism, which is supposed to be a bullish sign. It's a contrarian indicator. Yet, do you want to buy stocks in this market? Because we are seeing earnings come down. They're going to come down even more. We have a debt ceiling debate coming where we could see America's credit rating get downgraded, which is going to happen. It's going to happen. They're not going to come to a solution. I hope you know that. And it's not a terrible thing since this would be like really, really deflationary. Good luck with the community banks when that happens. To get that crisis covered, good luck. I mean, they actually come out and say that the U.S. is going to, think about it, the U.S., if we don't get this deal done, the U.S. is going to run out of money. Just let that sink in for a minute. The U.S. is going to run out of money. Right? We're supposed to be stopping the printing presses, right? We're supposed to be halting the printing press, no more printing. And they're telling us The U.S. going to run out of money. It shows you that no matter what, they have to print money. No matter what, they have to print money. And not to mention how China, Russia, and Saudis are partying, hanging out with hookers, hanging out together, having fun, high-fiving each other, right? Nobody's talking about that. That's a pretty big deal. By themselves, it's not a big deal. But together, that's a pretty big deal. Not to mention how our Federal Reserve really has no idea if the banking crisis is contained. It's contained. It's just limited to a couple of banks. We're okay. And Credit Suisse happens. Well, after that, it's okay. It's Deutsche Bank. It is still okay. Every week, it's like another bank. This is a global problem. It's not contained. Everything's okay. Again, the days of the Fed printing their way out of things, the consequences are dire now. You don't have that luxury with inflation. It's like, running in front of a freight train to buy stocks right now, all over the place. I mean, really, if you look at the markets, I kind of feel bad for people going, what the hell should I do? Should I be buying stocks? Should I not be buying stocks? I don't even know what to do. But it's just back and forth. So how do you play this market? Well, before I answer that, quick note for our wonderful sponsors, Masterworks. So Masterworks, using tokenization to disrupt the $1.7 trillion art industry. You should be familiar with tokenization because that's what we did at our company. So through this site, www.masterworks.com, anyone can sign up and invest in a number of great paintings from legendary artists. It's the first time you can do that. You do this by buying a small stake. That's called tokenization. They have a secondary platform to trade on, similar to stocks. So in other words, art industry is no longer this market for elite, super rich, and famous people. You can invest in these paintings and participate in their upside. Again, first time you can do this. It's an amazing platform. It's free and very easy to set up an account. And once you sign up, you can look at all the paintings listed on their site, see which one you want to invest in or own a piece of, right? And you can see them trade on the platform. They also provide some great education material for new investors who will be learning about this incredible asset class for the first time. Again, you can learn more by going to www.masterworks.com. That's www.masterworks.com. So, how do we play this market? I can tell you a few things. One, own large caps. Not just any large caps, but you have to own large caps. Industry leaders. These are companies that have strong balance sheets, great management teams, who always take market share during recessionary times. Also, if they don't do as well, a lot of these things are conglomerates, and what are they going to do in times like this? They're going to do what Alibaba just did. We're going to split up into a bunch of units, and the stock pops 15%. And you may say, holy shit, that's a lot, but I mean, what was it, $800 billion market cap, and it went below $200 billion? You got to try to extract value somehow, and that's a great way of doing it for Alibaba. But you're going to see a lot of companies do that. So AT&T do it a little bit. You're going to see other companies do it. These conglomerates, GE did it recently. But in a market like this, when you're not seeing the value, that value that think your stock deserves or the company deserves, you may see that. And you're going to get that. That's a catalyst for large caps because when they announce that, that provides more value and allows them to raise money for each separate division. But great plays during recessionary times, which is where we're heading. Learn how to buy puts. Sound like a broken record. Long-dated puts. We do that to an MFT product. Jenny's the best at finding great names to bet against over a 9 to 12-month period. I watched some of her recommendations go up 5x plus when many of her recommendations wind up shitting the bed. And when I say shitting the bed, they're going lower, and that means she's doing good because she's buying puts against them. She's able to see this, buy the right puts. It's not that easy. It's very easy for you to do through the newsletter. Just do exactly what she says. Go to your account. It's very simple. But to find out, look at implied volatility, see which options are best or where the retracements go back to, how much the stock could lose and what's the best value of those options. It takes a little bit more than that. You need an analyst, and she's the best of the best at doing this. And people subscribe to that service like crazy. They love it. It's mftoffer.com. If you're interested, again, we push it down to $500 for 3 months, and a lot of people renew it. Again, the last 3 months, not so crazy. Then you see the banking crisis. You're like, holy cow. So all these stocks go down in February, a terrible month. The next thing you know, you're up in your portfolio because you own some of these. You see the value of these things really take off. It's important. It shouldn't be your whole portfolio. It should be 5%. Maybe you go a little aggressive at 10%, depending on where the market is and how high it is. Right now, stocks are more expensive than they've ever been when you're factoring interest rates since the dot-com era. Think about that. I mean, trading at 18, 19, 20 times forward earnings is not bad when you have 0% interest rates. We don't have that anymore. But with some of our recommendations, again, it's not just, I'm protecting my portfolio. You kick ass. It's a greedy product that you make a lot of money when companies shit the bed. And it's a lot of fun because, and I'll say it, okay? I say the truth. There's no better feeling than making money when everyone else that you know and your friends are losing money. That's what this product does. And I hate to say that, but deep down, it is true. It's not like, oh, we're all making money together and buy this and high five. It's nice to say, hey, I was smart enough to do this. And when everyone's getting wrecked, you're making a lot of money. And most people that do that keep quiet and not going to tell everyone because no one's going to like them. But it's true. And you need to protect yourself in this market that's more uncertain. In a credit crisis, I felt like it was more certainty. You didn't really know what was going on, but you avoided it. You said, okay, I got to get out of this market. COVID, even before that, I was like, you got to get out of this market right now. This is a market where there's things that are working and you're like, should I stay in the market? But it's extremely, extremely dangerous. There's just so much uncertainty. Uncertainty is a death blow stocks. I said that a million times over the past 15 years I've been doing this podcast. Uncertainty is the worst thing to happen in stocks, and it's never been more uncertain than right now, especially with the Fed. The Fed really has no clue. The Fed has no clue what they're going to do. You never see the Fed flip-flop on a monthly basis like they did over the past 30 days, ever. So you look at some of those recommendations, MFT, would like to see a lot of these companies go lower, especially heading into earnings season, if they warn. I mean, you're looking at a lot of these names, expectations are very, very high, especially for some of these technology companies that have rebounded this year. I suggest owning gold and Bitcoin. Don't fight each other. Both of you own it for the same reason, so own it for the same reason. You get gold back and forth. Is that the right investment now? It should be good. It should be going good. But then the dollar goes up and dollar goes down. And again, that inverse relationship for gold back and forth. It's, if you're looking long term, look, the Fed is going to continue to print money forever. They're going to. No matter what they tell you, they have to. And it's evident just from the recent banking crisis. You think that that's it? You think it's over? That that's the only thing that's going to happen? What are you just going to have in commercial real estate? And that's the next shoe to drop. And after that, things that we can't foresee. You think that we're able to raise rates by the fastest pace, the most in history in the Fed era in such a short period, and there's going to be no consequences? You think this is the only thing that's going to happen? And when it does, especially going to earnings season, a lot of these names, if it's not this earnings season, it's going to be next earnings season. Expectations are just too high. And they're going to get nailed. But tomorrow's Wall Street Unplugged Premium, Daniel and I are going to go more depth, right? We're not just going to give you sectors at all. We're going to give you individual names. Stocks are going to be beneficiaries and those that you better avoid. In fact, if you look back a couple weeks ago, we created a list. It was 31 stocks. This is for Wall Street Unplugged Premium members. Many of these names are most likely in your portfolio or in your 401ks. Very, very popular names. Some of the largest companies that we believe could see 15% plus pullbacks in the coming months. Why? Because they have operations. More than 50% of their sales come from overseas. You saw the dollar come up. And yes, the dollar did pull back a little bit, but it's been much, much higher after declining a lot, which is not expected. And you're seeing downgrades in several stocks, even from JP Morgan, so the big banks are saying, research firms, that, hey, we're going to see earnings come down even further because of the dollar. And make no mistake, that's a big deal. We saw that. We saw that from the technology companies. We're talking about Nike as well, where 20% of the operating profits came from the dollar crashing. And it hurt them. The stock fell 13%, 14% one day. It was the largest one-day decline, I think, since like the 80s for Nike. If I wasn't mistaken. That's what you're going to see. So now you have high expectations. You have companies that are leveraged to the dollar, where the dollar has gotten higher. Can pull back a little bit, but still higher from last quarter. And man, you can't afford to miss. And if you do, you're going to see a lot of these names. These are very expensive stocks that are trading at 23 times forward earnings or more. These 31 stocks at more than 50% of the business they do overseas. So they can't afford to do anything wrong. And if you own these stocks and they go down 50%, just remember we told you to be careful because you have to be careful with some of these names. The ones with those high expectations where valuations are incredibly high and you're going into the quarter, look out because those earnings are going to have to come down. Because if you look at NVIDIA, every one of NVIDIA's customers are cutting costs. Every one of them are cutting costs, and they're cutting costs dramatically. They're probably increasing costs for AI, but it's still a small percentage of their overall business. At 60 times forward earnings, they have to be perfect. And they could be perfect. Netflix was perfect. Apple was perfect. They traded 60, 70 times forward earnings. People said you're crazy to buy them. However, back then you had a low interest rate environment. You'd have companies laying off. You have technology on fire. Business booming. Right now, you're seeing the banks slow down lending. Okay, we're going through a little bit of a banking crisis here. It's a different environment to be that optimistic, to be buying these stocks at those crazy valuations. 31 names. The Wall Street Unplugged Premium. They have that list. We're also going to single out one specific name that will make its way into our Dollar Stock Club portfolio. To get WSU Premium members, they get a trading idea from us every single week. That includes a buy up to price, a stop loss, a one-page write-up, which includes detailed analysis and catalysts, why we think it's going to go higher or lower. It's taped every single Thursday. That membership is just $10 a month, which is an incredible bargain, considering most trading products in our industry, if you know, and I know you guys know, because you buy financial newsletters, not just from us, but from everybody else out there, trading products, they sell for thousands of dollars. This is $10 a month. This product, I wanted to make affordable for everyone. I want to be able to educate everyone. And it has so much good content in it that we have to charge for it. I don't want to give away stuff for free anymore, and I'm being honest with you. There's just too much great valuable material that deserves to be behind a paywall. But I didn't want to bang it out for $100 a month, $300 a month, which you see for a lot of trading products, but it's $10 a month. So if you're interested, fine. If you can subscribe, you can cancel anytime. It's up to you. But thus far, since we launched this just a couple weeks ago, based on your feedback, it's a huge, huge, huge hit. And people love it. And once you listen to it, you'll realize why. You get research, analysis. We share all of our research engines with you. Everything that you're not really going to find anyplace else, especially for that price. So to learn more, go to WSUoffer.com. That's WSUoffer.com if you want to learn more. So guys, that's it for me. Get very, very happy to be back. I'll see you guys tomorrow. Take care.